Hey everybody, welcome back. So we're just going to start with the basics. We have to go through tariffs, what happened with tech today. I just think we should just talk about the destruction of the NASDAQ and just talk about exactly what's going on and where this is heading. And there's a couple key things here. Number one, this is the 200 and we are below it again. Tried to rally over and then we didn't. Now, why is this so important and why spend time on it? Because this bar completely encapsulated the move over. So you had this beautiful piercing pattern right here where you open, down, up, over, so it gives you hope. There we go again with hope that we're going to hold. And what's it do? Tries to rally right to that PCE December contract roll, breaks down, and then you close lower than you ever have before. There's reasons for this, the tariffs, there's some other news out there as well that we're going to get to. But when you look at this in the construction of it, if we did the simplest things and just drop this to a bear chart for a second and just look at these levels, it's pretty clear what's going on here and that we're now rejecting this December contract level, trying to get over it and can't. So this is pretty significant stuff. Any chart that you would look at that had a double top like this, had a neckline and you broke that neckline, tried to get back over that neckline and couldn't, you would consider that a rejection. I mean, anybody that would be looking at that right now and was looking at that neckline on any other chart, we can just go back a little further here so you can see it, on the hourly, you would call that a rejection. I mean, it's pretty obvious what happened. You went over, tried, rejected. It is what it is. I mean, there's no reason to call it anything else. For now, where does that put us and where can we go to? Well, a couple things here that I would see is you're clearly through these levels. So the real next level is pretty much the top of this and you're through. So then you start looking at the bottom, and then that really took you to where you stopped, which was right there, that 20,300. Yeah, whether you stop or don't stop, no one really knows when the selling stops. You're getting to points that are getting pretty flushy, and I'll show you ways that you can kind of determine that. It doesn't mean that you don't bounce and have some real damage here, and you do have real damage here now, and you can see that too. If you go here on a 4 hour, for example, and take a look at this, you'll see what I mean by this. So if you go and take a look at the 4 hour and you take this peak from August and you just bring that all the way over, drop it to here and just see that cut like right there. And you can see that drop, right? And then you have a much larger one that's down here, and this is really the structural one that you want to watch. This is really where I think you're going. And this is the long-term one, and hopefully this one holds. But that gets you around 19.6, 19.7, somewhere along those lines. And that would really get you to that March, April level, that high, like right in there as well. That seems to me where we're heading. You broke this trend line, you've been unable to get above it and really hold anything over it ever since. And since then, you've just been fighting like minor trend lines, lifting over them, trying to break other ones. And then today you just broke really hard again, and you should be able to see it very clearly here on Friday at 10 o'clock. You tried to rally through it, but you're just not able to. So when we see this, what I tend to do is I just stay out of the way. It's just so much easier. Now, overlay this with a couple other things, and I think that this gets real important. So what I mean by this is, let's take a look at the ES before we go. So one of the things I was saying today when we do the public pre-market was, here's the 22, here's the 55, and here's the 100. They're all pointing down. At the same time on the S&P, if you go to at the high, and I believe at the high is a little further along, you're right back here, and you drop a VWAP there. And then if we went to November and just focused on the election, went to that election date right here of the 6th, and we just focused on that, you can see the amount of resistance that you have up here, also tied with that election day level. And what did you do today? You hit that right around, what was it, like 6 a.m.? And that was it. You just completely, utterly rejected it, and you sold down all day. This is a 4 hour chart. I can show you it clear on just looking at a 30-minute chart. You can see it just gets up there, hits that 930 level, and that was it. You were just not able to get over that level. You have all this weight above you. You reject, and now you're back to that July level. This is a really constructive level for the market, like really important level. This July level, this is actually, I think goes back to the 17th. And we really don't want to break that. But again, if we just went here and clicked off of everything for a second and looked at these moving averages, 22, 55, and 100, I mean, does that look like it's going to hold? Because it sure doesn't, make me feel warm and fuzzy when I look at it. So I think you have to go through it and say, okay, best case scenario is we don't roll, we go sideways. And this is what I was explaining today, and I think that hopefully people got it. What we're gonna have to do is switch. I can't play with those charts because if I do, I'll have a problem. Just a quick reminder, 27% of you do not subscribe to this channel, and all this data is collected. So, and goes together, so you might want to subscribe to it. Also, there is a free newsletter that goes out, and we revamped it. To see Mondays, just click below in the link in description. Actually, I'm just going to pin the comment. In the pinned comment, I'll have the new free. It's free. It comes out every single day. And I do a recap of everything. I have somebody that's helping a big newsletter, and they know what they're doing. Edit all my information. So all the links of everything that happens during the week, all the research, everything's in that newsletter and worth getting. If you take a look at how this is playing out, what do you say? I mean, you see a level that you can't hold, right? But wait, there's more. If we go and zoom out of this on a 4-hour and we just drop this down, you're going to see these levels, these really big levels that you must hold. Like here's October 23rd, and here's where you are. Like that is the mother of levels. You really don't want to start breaking. So have you broken your major long-term uptrend? The answer is no. Now, some people will say that they're going to use just that it has to be closed and not wicks. I don't care about wicks because they're price rejection. And if you're in that camp and you came to that, well, you've cracked already. So if you don't use the wick and you're going to be at the camp of I draw my trend lines on those levels, and I get that, I do. I'm going to be really blunt about this. I get why people do that because the wick is price rejection. If you look at it from that perspective, down, broke, try to get over, rejected, you've cracked it. And it's definitely something that you have to look at and deal with now, because now someone could actually make the argument you broke your long-term trend. That doesn't mean that you go down and you fall apart and the sky is falling. What it does mean is that you want to stay out of the way. And then what do you do with staying out of the way? Well, you do exactly that. You stay out of the way. What that means is like, don't try and catch falling knives. I equate it to a dam. Let the dam burst. And then you go there and then you pick up the fish on the ground. Don't stick your finger in the dam because you don't have enough power to hold the water. What I don't really like about what I saw was we formed this bottom and then we're trying to rally. We're not able to, and we do the undercut. So a lot of people are going to try to play this. I don't know that that's wrong. If gun to my head, I would be playing the S&P and the low beta names, which is where I'm actually making money on the long side versus playing the high beta names in the NASDAQ. There's a real easy way to determine this. I'm going to show you before we begin. Look at the breadth, and then we need to go over some of the things that happened today, especially in some of the other global markets. I think it's really important to get a full grasp of this. But you can make this argument that, hey, it's cracked, and now what do we? I think you rotate. That's my sense of it. I think you're going to rotate through sectors and go sideways to down until we figure out what's going on with some of these topics. But take a look. So this is something that I have used for a very long period of time, and it's super simple. What I do is I take the Qs and I divide them by the SPY. And then I just turn it to a line. Why? Because it's easier. And you can leave the line blue, but let's make it super bright because then people say I can't see that on my phone, boomer. So you can see that now, right? Okay. So next thing I do is I just put a 55 on there. And then what we'll do with the 55 is I'll change the color of that so that you can see that against it, and we'll make that super big. And all I want to do here is I want to take any time that I am below the 55 on this equation, I'm not buying tech. So if you went back and looked at this and said, I'm not buying anything but, or I'm buying tech when it flips here, and I stopped buying tech on July 18th, 2024. Go and take a look at the charts. I'm not going to do it all now. If you went back and looked here and said January 23, I'm going to start buying tech. If you went through anything and just overlaid this, it's absolutely crazy how it works. It's a very simple line in the sand saying, do I want to be long tech or not? And usually it means to me, because I love being long tech, I put the brakes on and I will dip my toe in the water. And it's usually not a great idea. And then I remember why I use this. But if you go from the 18th and you come all the way back down to here, like the 26th, or even come back to December 4th, it's real clear when you wanted to buy tech and when you didn't want to buy tech, and you can see these little points of interest. It works very well. So I would use this and something that you can just screenshot and set up yourself. It's super simple. I use a 55. You can use. I need this to reset. So I need the breadth to reset. If I look at it right now, this is Friday's levels. To me, the best thing about the levels from Friday is I'm still above the 50 here. On the 50 and on the 200. This is the 200, the 50, the 20, and the 5. You're still doing okay. I'm really curious how it looks today. What I really don't like a lot is this. I really don't like this on the SPY. It really does not make me feel warm and fuzzy. What I did here was rally up, then I'm over, and then I undercut, and I encapsulate that bar. I really don't like that kind of action. Now, the important thing about this is you still have the itchy bar right here. And if you look at this is December 18th, the Fed meeting, you're kind of hanging on there, kind of. What you really don't want to break on the SPY for those that are trading it is down here, or the S&P rather. You just don't want to break that. Let's just leave it at that, and hopefully we don't. But we have a lot to go over. Let's get to it. So we're seeing a lot of, let's refer to it as hubbub about GDP and the Atlanta Fed and what the Atlanta Fed represents. So the Atlanta Fed is a composite and an estimate of what they think GDP is going to be. I want to be really clear about this. It is not the be-all, end-all, and they do a really good job of actually explaining this, but it does move the market, and it does show the development of which way we're going. So in other words, if you take a look here, we were heading up, right? And this was before 25, and this was into 24, and we're heading for 4% GDP. And then they're like, oh, we're going to 3. And then they drop it down. They're like, oh, well, we're at 2.5. And then they went to -1.5. Now, once they went to -1.5, just to go through how this is done, all the components, if they don't have all the component data at that particular time, and I'll show you this in graph form, what they do is they just use what they have. And that's why you get these extreme moves. So for me, you're not getting a full picture, because if they have only 4 data points, which they go off of, if you have 2 data points, they're going to weight those 2 data points before they get the next one. They also don't do correction. So it leads to, meaning if there's a revision of the number. So it leads to massive volatility. If you want to see what they say blue chip consensus, the investment banks have you in here. The thing that this is good at is determining the rate of descent or ascent and which way the GDP will be moving. And I want to be really clear about this. Before I go to the next slide, every single firm is taking GDP down. And when you take GDP down, there's a real simple equation. So you take 2.5% of GDP. And once you get to 2.5%, every 7% of GDP, every 1% of GDP over 2.5 is 7% of earnings. So if you have 2.5% GDP and you go to 3.5%, it's another 7%. And it just keeps going like that. That's why GDP is so important to the stock market. So if you just think about it like that, and of course the gross margins tweak it and everything else, but it's back of envelope way to look at it. Now, why are we plummeting? Well, to start with, we had a lot of ISM data that looked good. There was one that wasn't great, and it shouldn't be shocking because of what's going on with tariffs and everything else, but new orders absolutely plummeted. And then from there, we can just see how this went, and it didn't go very well, did it? Right? So that number gets factored into that Atlanta Fed, and they factor it in immediately, and they're like, nope, this goes in, and that adds to the volatility. So when that number came out today, after this was added to it, this is what happened. So within a day, just so we're clear on this, you had blue chip consensus where everybody was in line, and then out of nowhere, we went from the 25th and they dropped all the way to 1.5, and then by the end, this was Friday, and then by the end of today, they're down to, I think it's 2.8% negative is what they're saying. So you can see why this is concerning to people. The thing about it is you have to understand the calculation. I always tell people this. You want to learn why this is the way that it is. And understand this is the blue chip consensus, and you can see how tight it was and how wide it's getting, the forecast. And basically they're like, everybody's wrong. Everybody's not wrong, but everybody might be high. And I think that that's the question that needs to be answered here. And they have some valid points to this, but let me show you the calculation a little bit, or at least show you the components. Now, why am I spending time showing you this? Because when you understand this stuff, when some number comes out today, like when we were trading, once we saw this number and we saw how bad it was, we knew. Once you saw the new orders, you knew you had a problem. Matter of fact, you could see the initial drop in the market. You just go look at the 10 a.m. bar and you can see it. But what this does is it breaks it out by subcomponents of contributions. You can go there right now. Just type in GDP now. You can go there yourself and learn this. It takes 2 seconds. And you can see how you were up, and then you can see how it all flipped from up to what? Say it with me, down. It's not rocket science, guys. And then you just go look at the color coding. Well, what happened here? Well, net exports. Okay, well, we have tariffs going on, so everybody is doing what? Well, they're not going to export. The net exports are just going to fall off a cliff. So that subcomponent contributed to the entire move. So when you look at them dropping GDP like this, what did it? Net exports. So what would this tell you? Well, any change to tariffs, either here or somewhere else, is going to affect net exports. So anything good with it is going to rip GDP according to the Atlanta Fed. If you go here again and look at it, you'll see it's also net exports because they're looking at the new orders data, and there was also something with residential investment. And this shows you subcomponent contributions to the growth forecast. And this shows you changes in subcomponent contributions. So your changes here were net. And then when they show you how much weighting did this have on it versus something else, and then they're like, well, government spending now is contributing more to it than it was on Friday. And this allows you to see where they're running into issues like, oh, residential investment's becoming an issue. Non-residential fixed investment is becoming an issue. It allows you to see what the issues are. So if you see that change, and it just tells you about that change for the day, then you know going forward. So if you're that interested in this, then you're going to be looking at order flow and seeing what's happening with the ISM data, because that's what's going to move the market. I hope this wasn't too boring, but at least you know what is happening and why that name is why that is moving the way that it is. Now, we sold down in the middle of the day, and you can see why. I thought he was really going to talk more about crypto. Apparently that is on Friday, and we talked about Taiwan Semi and how great Taiwan Semi is coming here. But really the reason Taiwan Semi's here is because 25% Mexico, Canada, starting tomorrow. Yep, that's it. We're doing it. Move your plants here. It's not that easy. It's just really not that easy. And I would say this about the conference call today. If you didn't watch it, I would watch it, because it was a pretty tough, drawn line in the sand. And I don't see this changing anytime soon. And they're going to have to figure out some things. But please be aware of this. And this is why we dropped. And as always, we all think that there's going to be a deal to be made, and you're watching us open up here on the Mexico stock market, lifts and then sells at lows of the day, and you come here on the 5-minute and you see the lift only be met by that meeting. And when he started talking about it, that was it. It was just straight selling. And the same thing happened with Canada, and you can see that as well. As soon as he started speaking, that was it. And the Canadian stock market drops, and you can just see tries to lift, can't, and then just absolutely implodes. And then when you start to see this kind of thing, you just kind of have to pay attention to it. So for me, looking at this now, all this is going to lead to is more, I guess the right word to say is just nationalism, where people are like in Canada, like, I'm not buying that peach, I'll buy this peach or whatever. So you're going to have that kind of back and forth nonsense for some time, why this goes back and forth. And Canada says, well, we're going to do it too, and then they're going to do it, and then both sides will declare a winner, and eventually it goes away. I don't think it's going away anytime soon. I think this is going to go back and forth for some time, and I think the market's digesting that. The bottom line with this, no matter how you feel about this, I could care less. The only thing that matters to me is that GDP is going to drop because of this, and if GDP drops because of this, earnings are going to drop, and if earnings drops, the market's going to be weighted. You need to think of this as a way of going, I need to deal with rotation, and that's why I keep saying to people they should be looking at domestic like XLF or things like that. We were talking about KIE names today in the public pre-market live that's free. You just should go to it. If you're trying to get into the community, just look for a letter. I send them out in small batches for those that are on the way. Trying to do like every 48 hours a small batch just to deal with the amount of people that are trying to get in. But if you're looking at this and how to play this, you have to look at domestic names that don't have to deal with tariffs. I think that makes the most sense. If you're going out there and looking at the stocks right now, you're out of your mind. If you're looking at this and saying, oh, that's gladly going to hold. I mean, when we really get into the trading today, I came in long a bunch of NVIDIA. I didn't last very long. I mean, at all. Before I was like, oh, I'm on the wrong side of that. And it's really been like that. I'm surprised you couldn't get any rally at all. Matter of fact, as soon as we broke like the 7 o'clock level, you want to watch these 7 o'clock levels on retail. Once they start dumping, that's really pretty much it. Once retail got out of the way, that was it. It was just on. It was just straight dumping. And when I see this kind of stuff, what we did today was just let them set up and not get in the way or out of the way. I was not in a big hurry to see if I had to be long or short. I allowed them to set up, and it really made the difference on the day. Even this with the PLTR, I allowed this to set up for 5-10 minutes and started setting up beautifully. And then out of nowhere, you just had wave after wave of selling. Even when you got back here on the 90, you can just see that all that happened when you got back here was you formed a doji, broke the doji, and then that was pretty much it, and that was the end of it. I mean, it's pretty telling how nasty that got up here. And then from there, you started breaking down, and you just never really stopped until the end of the day, did it? I think this is really important to get. I really do, because to me, nothing was safe. And usually when you start seeing nothing safe, it's a good thing. But we had this new task force that's actually going to go after the social media companies for stuff that's online. That definitely hurt Meta today. But what you're saying is rally and we're selling you, rally and we're selling you. Until this changes, you have a problem. And you don't want to be there, again, I'm going to just say it, you don't want to be the guy standing there saying, I'm going to hold the water because we're going to hold the 55. I use a 12, a 22, and a 55. You should use what you're comfortable with. I think this presents massive opportunity for those that want to short and those that want to trade around it. But you need to be cognizant of what's going on. And what they're going to do is they're going to get out of the market. It's very clear. and then reset and go from there. I'm leaning more towards the S&P kind of names, but there's more to this. So we had this conference coming up, and I thought it was today, but people are telling me it's Friday, and I don't know how I had the wrong time, but apparently it was. I find it really interesting that you made these comments on a Sunday, and then you have no follow-up on Monday whatsoever about it. Like, there's literally no comments whatsoever about Bitcoin or what we're going to do there today at all. And I find that like really troubling. And basically what happened is you just created a bunch of bag holders and they got absolutely smoked. What happened with MSTR today, this rally up and then fade is really crazy. It did present a nice short opportunity for us. And the other thing that I tend to point out in the community when we're trading is like, oh, you got to VWAP, like this was a perfect spot. I even put it out there. I did. You can see it right here. So I'll just post a chart. I had no position in it. I didn't do it. But it was absolutely perfect. It ran right up to VWAP, rejects VWAP. There's your bearish engulfing. You're just using the high of that, and then there's your, there's your entry, and then it just absolutely fell apart. And when you see this kind of stuff, it does make life easier. But for me, the biggest important thing that I would take from this is all they did was net selling in these names all day today, which was really surprising because I thought some of this stuff would actually hold, but really all you did was just get to the top of these levels pre-market and then just completely, utterly implode. You waited, and I tend to wait in markets like this to make sure of it. But you start getting these 5-minute orbs to the downside, it's like, okay, well, there's your short. And it was a perfect short. I shorted this today, did well with it. But I think when you look at this kind of stuff, you're not seeing any buying, even on what could be construed as good news. You're just seeing reasons to get out of the market. And I think that's really important. I try to keep these shorter during the the weekdays just for people, but there's so much to go over. Trump names cryptocurrency, and you can see this right here. And then when this hits the tape, and then not only does he do that, he actually lists, oh, we're going to do this one, and we're going to do this one, and this one, and like out of nowhere. And then there was just very little follow-up with it. And I just think that caused more people to go, okay, are we really doing this or are we not? And we're going to probably continue to see this flight to safety until we start getting through non-farm payrolls, in my opinion. I think you're going to trade around until you get through the non-farm payrolls on Friday. And earnings were fairly decent tonight, but this is really the crux of it. That's it.